Good evening, everyone. It is Evan from the Trade Risk, Tuesday, April 7th, and I'm here with a market recap and some trade ideas. Sort of a mini recap. I'm not going to go through all of the markets I usually cover. I'm going to save that for tomorrow's recap. We're just going to talk about the S&P 500 real quickly, what my thoughts are on the market, and then we're going to look at a few trade ideas for the rest of the week. So if you look at the SPY, today was basically a quiet day. I mean, a little bit of attempted upside movement, continuation off of yesterday's move, but ultimately failed, closed slightly red. Now, I want to talk about yesterday's action real quick just because I think it was a pretty interesting day and it was a day to take notice. Now, I think the bigger picture here hasn't changed. We're still in a range, 204.50 on the downside, 209 on the upside. I think this range is still kind of keeping us contained here, and with that you get some increased volatility and you just get a lot of chop and a lot of indecisive moves. So yesterday's action though was interesting because and I don't focus too much on data, but it was coming off of a really weak jobs number. Now I know you could take the other side of that and say a weak jobs number only means more Fed stimulus or keeping rates low for longer, and that could very well be true. The point is, the jobs number came in under expectations. We came into the day, Monday, opening lower than Friday's low. So we were gapping below all of Friday's action. And that was a great excuse, in my opinion, for the bears to really break us down here and challenge this 2050 support, or even just kind of stop us, run some stops underneath, or just see what's going on under 204.50. But instead, we get the opposite. And we saw a fierce rally yesterday, engulfing all of yesterday's action and bringing us back towards the high end of this range. Now, again, we couldn't make any progress with it today, but I think yesterday's action was certainly something to take notice, and you want to see really, the top half of it hold, even the top, I said yesterday 206.25. I want to see at least 206.25 hold, which just means 60% of yesterday's move. It's no real magic number to that. I just want to see the majority of Monday's rally hold in place. I don't want to see the lows retested again. That would get me more on the bearish side of things. But for now, I'm a very neutral bias because we're in this range, but a slight bullish bias based on yesterday's action. So one other point I want to make is just with the McClellan oscillator here. The McClellan, for those of you who don't know, is a way to gauge the health of the internals of the market. So it uses the advanced decline line and two moving averages, 39 EMA and a 19 EMA, and it looks at the differences between those moving averages and it calculates this value of the McClellan. More info, just Google it. There's a lot of great info on it, and depending on which version you're looking at, these values are pretty irrelevant. It's just the pattern that's interesting, and the pattern is, look where we are. We're back to where we found resistance here all the way through for the past several months. Now, I'm not going to get big into technical analysis on the McClellan. I think the point is that we've seen multi-day periods of up action, of advancing stocks, but then we always seem to be stalling out right at this line. We can't sustain an up move beyond this line for the past couple of months. And you can see, basically yesterday's action brought us right to this level, and then we're cooling off again into today. So what you sort of want to see is, you'd like to see us finally break above all this cluster of resistance here, if you want to think of it like that, in the McClellan, and then have that in timed with some further price action above today's highs or Monday's highs, or even 209, and that would give you some clues to see that this breakout could be for real to the upside. Now, we're not there yet, just some food for thought and how you can use some of these other indicators to gauge the health of the market here. So with that said, I think a neutral standpoint while we're in this range with a slight bullish bias, as long as we can hold in here the majority of Monday's gains. So with that said, I mean, I've been really tactical with my portfolio. The members here, we jumped into Apple yesterday, and we got quickly stopped out of it. Took a small loss on it today, just given the way it closed so poorly on the dead lows. It still could potentially be breaking out of this pattern here, but just not good enough action to me with a sort of an indecisive market environment. And we also bought some Twitter yesterday. Twitter obviously had a pretty nice day today. We took partial profits, just 25% off today, but I'm going to continue to let that one run, but really running pretty light in the portfolio myself, just given how this market has been. So enough of that. Let's look at some setups going forward. A couple of long setups. The first is Pandora. I thought I might get a trigger on this today, but we had a little bit of a fade here in the afternoon. I'd like to see this, basically this top end of this box here, basically today's highs. Let's see if we can get a close above 1675, something with a little more strength than we saw today, and I would probably be interested in here for a little bit of a breakout. You can see it's been in a downtrend for quite some time, and it looks like it's trying to reverse now, so I'm keeping that one on watch. Next is NOC. Again, this one looked like it could get going here intraday, but it did have a pretty ugly fade and just closed just mildly green on the day. This pattern may not be complete, may need some more time here, but 163.60, 164, however you want to cut it, looks like could get the start of a move back to the previous highs here. So keep that one on watch this week. Next is GoPro, and this one has been chopping around a little bit, and it looks like it's trying to get back up here and challenge this $44 level. You could see it hang out here last week here for about 5 days. We had this strong potent day to the downside here as it snapped sort of this little high rising trend line, but then you can see the buyer stepped in and really bought it up, created a slightly higher low, or at least it's in the process of trying to, and I think a rally above $44 could get you a nice little squeeze into these upper $40 level. I think the chart is still damaged on a long-term basis, but if you're quick, I think this one could be worth a little bit of a momentum trade in GoPro. And finally, ATTO, so recent IPO, you can see it's having trouble, low ticket item here too, it's having trouble holding above this $12 level. It was a pretty ugly day for it today, down almost 2% here, but you can see this is, it IPO'd in October of 14, and it's really just chopped around in this range. So I was looking for some type of explosive move above 1225 to potentially signal a new leg higher here, some continued upside movement. So keep that one on watch. And finally, some short ideas. BIDU, this is BIDU. This one's really weak here. Gap down yesterday, and right into this support line 203, which is pretty important today. Mildly green, but you can see basically a lot of today's action was faded as well. Zoom out here, you can see it's hanging on to this kind of cliff. Weekly chart really shows the picture here. So it's been in a nice uptrend on a weekly chart, but now you can see it's starting to come back down into this 203 support. I think you could get a pretty quick flush lower if it definitively does lose these lows. So keep Baidu on watch. And last is Alibaba, BABA. This one not quite ready yet, but you can see it's still very sluggish here. It might just be in the process of carving out a very a more substantial sideways range between 81 and 86, but it is at the lower end of the range now, something that could be interesting on a short setup. If it does definitively lose and close below $81, you could see some continued downtrend action here. This gap is still in control back from earnings, and this would be all-time lows for the stock. So keep Alibaba on watch if it cleanly loses $81 on the downside. And that's it. That's all I have for today. So stay tuned tomorrow. I'll go ahead and run through a lot more markets. If you have any names that you want me to cover, shoot me, tweet me, or send me on Stock Twits, and I will gladly cover them tomorrow. So thanks for watching. Catch you next time.